And Rebecca Patterson. She's the former chief investment strategist at Bridgewater and currently senior fellow on the Council on Foreign Relations. Great to have you here on set.
It's great to be here.
Welcome.
Thanks.
Beautiful day outside.
I know. Markets at highs.
Yes.
Everything is awesome.
What's there to worry about? So, and we were talking about this a little bit with Greg last. I mean, you could list a gazillion different things, but why do you think that this landscape, to Mike's point, has become so placid?
Well, certainly ahead of the August 1st latest tariff deadline, there's a sense that it might not be a real deadline, that the tariffs that actually are put into place, to the degree they put the market or the economy at risk, they'll be pulled back. So the so-called taco trade, I think that's still alive and well, that perception. I think what we saw from the bank earnings last week is that the consumer is still spending. And given how important they are for the overall economy, I think that also creates some optimism or maybe complacency. You've got strong buybacks year to date. That is a support for the market, all else equal. And then I think structurally you still have this very strong tech optimism around the AI longer term trade and all the different companies that will benefit from that. So I think there are reasonable reasons for this. The question is, are we overdone? And I would be on the cautious side, especially heading into August.
Because it's a tough month and seasonally, as
well, certainly that doesn't help. Yeah. But I think to me, it's more about the tariffs. I mean, right now we're talking a lot about the European Union, and could it be somewhere between 15 and 20? So let's say we land, let's split the difference, 17.5% tariff on the EU. If you take that, that gives you a global effective rate of around 15. Add the sectoral tariffs, things like pharmaceuticals, semis, et cetera. We have a 20% global tariff rate. That is a big increase from where we are now and where we were at the beginning of the year. And while it'll take time to get passed through, and not every bit of it is passed through to consumer, it's going to push up inflation.
You know, FDR said there's nothing to fear but fear itself. But I don't think he was referring to the stock market, because the only thing that makes me scared in the stock market is when everything is awesome.
Yeah.
Like the lack of fear.
Yes. We've been doing this all long enough. The lack of fear is when I start to get nervous. And I know in March, everyone's like, well, we're not going to do that with the tariffs. Don't worry. And then it happened and the markets crashed. And why aren't we pricing in any of that risk?
The fact that it recovered so quickly and
fastest ever.
Everything keeps getting pushed back on the tariffs. And even Scott Besson on your air this morning said, well, we care about good deals more than quick deals. And I thought, oh, well, that sounds like the deadline might move again. But the end result is they have to have tariff revenue to help pay for the budget deficits. So 10% baseline's a given. And then beyond that, I think we're hearing from President Trump and the administration, they want higher tariffs, period, full stop. It's coming. We just haven't seen it come through a lot yet, except for some core goods.
It's the same debate kind of discussion we were having last week with different people. But like, is the effect just so disseminated, so widely, a little bit over here on the corporate side, a little bit over here on the customer side, a little bit here by the foreign exporter, a little bit in the currency adjustment.
So far, right? But if they do clamp down on transshipments, and if what we're hearing from companies, and the earnings season is going to be really helpful on this, we are hearing more companies saying we are going to raise prices. So we're going in that direction. More of it's going to get fed through to the consumer, and especially in things like back to school stuff we all have to buy. When it starts coming to holiday season, when it starts coming to food and foodstuffs. And we saw that in the last CPI report, a little bit of it.
Definitely.
We're going to see more of that. And you're going to see it hitting consumer sentiment and purchasing power. And the Fed's going to be stuck.
Can I take the other side of that, though? I'm not advocating for or against tariffs, okay? But I will say that all of our viewers and listeners know that in the past 4 or 5 years, prices have gone up for everything.
Yes.
Shockingly so. I mean, shockingly so for a lot of things. Food, household goods, just some of them seem like they've doubled. And yet corporate balance sheets seem good. Corporate consumer spending seems pretty good. Is there a case, Rebecca, where we get another couple percent from tariffs? Some people are going to call for doom. But like during COVID and all the price increases we saw since then, somehow we're still okay.
Well, one of the things that was really important in the last few years that created an offset was labor supply. The addition of immigrants to our economy in 2023, 2024 probably added over a percentage point to GDP each year. They consume. A lot of them are paying taxes. We're now seeing that flow move out of the country very quickly. And people wanted tighter borders. Everyone's on point with that. But The quick reduction of the labor supply is going to make it harder to have the growth and the tariffs to offset each other to a degree, which is what I think you're getting at. We need the consumer to stay strong even with higher prices. The consumer stays strong if the economy's growing, there's jobs. You're going to have a harder time with that if you're pulling back on immigration, and you're going to have a harder time with that, although it's mainly next year, not this year, when you start seeing the government spending on things like food aid and Medicare pulling back. Then you're going to have the lower end consumer, I think, really struggling.
Yeah, sort of
we haven't seen that yet. We won't see most of it till after the midterm.